we have our second speaker for today's session, and that is CA Manish Agrawal, CEO and co-founder of MGA Group. I'm just trying to introduce you. You can take a seat, or else you can just stand here. CEO and co-founder of MGA Group. With about 2 decades of experience, he has worked closely with startups and enterprises on company structuring, taxation, funding readiness, M&A, and regulatory compliance. He has led complex assignments including mergers, listing advisory, valuation, forensic audits, bank audits, and regularly represents clients before governing authorities like income tax, GST, DGGI, and such other for legal matters. As a virtual CFO, he helps businesses build strong financial system and scale sustainably. Today is going to talk about startup structuring, compliance clarity, funding readiness, cash flow management, and generic mistakes that founders should avoid. So, let's welcome Mr. Manish Agrawal on stage.
Good morning, guys. Thank you for your warm introduction. Today we are people around who have their startups, who are either already doing a successful business or planning to start one for themselves. Let's get to the topic on this National Startup Day 2026, where we can understand what a startup we should and we should not do. Most of us sitting here around are young entrepreneurs who are either IITians or professionals into the field, have there some ideas in their mind and willing to start a venture which can grow successfully and become a national and international success. So, I would like to understand if you are comfortable with English or should we take it in English? Okay. So, let's understand costly mistakes that startups make, what founders should avoid in their life cycle, in their business life cycle rather, and how to make it a successful venture. Today we know that most of the startups, more than 80-90% of the startups fail in their early stage, and 90% of the startups fail. Why? It's not that a founder is not good at his job. It's not that founder does not understand what to do. It's not that the idea is bad. It's never an idea which is bad. It's always certain decisions which a founder does not understand from the angle of finance. A success of a business depends on its profitability. And that's where we somewhere go wrong, the founders go wrong. Let's understand wrong structures, wrong funding, no discipline. What is a wrong structure? The first and foremost thing is, when you start a venture, you are very good at the idea, you have a clear thought process about the idea, no doubt on that, but what we lack is financial literacy. Financial literacy, we need appropriate structures in place. We hire people with happy salaries, we hire tech people with happy salaries, we hire marketing people, we hire admin people. Really understanding administrative cost is something we should avoid at early stage, because I have seen a lot of startups which hire people for cost management. So there is a team sitting around who brings in quotations from various vendors, ensuring there is a cost management. Startups and founders should understand these employees in the organization with hefty salaries are itself a dead cost to the organization. As a business owner, we very well know what is available in the market. We are sitting in India, we are local people, we understand the market well. So we really don't need those middlemen in our organization who eat up a lot of sums of the company and also add up to the cost of the company. So that's something, a major factor which affects the role. Second, we do not have clear defined deadlines. We do not have pre-planning in place. I'll give you an example of a startup where we were consulting them. This company had a project to be executed. The CEO comes with a clear idea, clear picture, clear vision to the entire team, gives a deadline of 3 days. Do the entire printing of marketing material in next 24 hours, bring it on my table. He leaves, the employees does the printing at a cost of some 73 lakh rupees for the entire marketing and branding of the company. Eventually the startup fails with an over aggregated loss of 46 crores. When we started understanding the structures of company and when we started evaluating the structures, 2-3 things majorly we observed was, one, hefty salary on employees. We terminated employees with an aggregate cost of about 2.5 crores per annum. which were complete dead cost to the organization, 20-25 lakh per month. Second, when we evaluated pre-planning failures, there was no proper CFO in picture who could have come at a cost of about a lakh per month or something, adding another 20 lakhs to the company's cost, but saving on these marketing cost, printing cost. So the printing cost, when it was pre-planned, came down to about 30 lakh rupees, which in name of emergencies, the vendors and the middle team made the cost increase to 70-75 lakhs on an average. So 30 lakh rupees per marketing budget could have been saved over a period of last 4-5 years. That's a chunky amount of money that we could have saved just by using right team in place. This is what we talk about wrong structures, wrong funding. Most of the startups run behind investors. Investors come with certain terms and conditions. Investor says, okay, I will fund your company by 50 lakh rupees. I will take 40-50% of stake in the company. This is bad decision. You cannot give huge chunk of your stake in the company to the investors. Certain investors say that you are early stage startup, I am here to help you. They talk very rosy picture. They say, okay, we'll do a time sharing where you as founder of the company will work for me on 30 or 40% of your time will go for my organization. In return, I'll pay you money for your overall development. Sounds interesting that I just have to give time. That's something we cannot do. As startups, we have to be successful. Our time is ours. We cannot sell our time. The cost of that time is going to be heavy on the entire startup in long run. So that's what a startup should not waste its time behind someone just because the investment is coming. We also think without investment startups cannot function. We all come from a background where traditionally our parents were doing some business or someone in the family was doing some business. All those businesses were startups. No one ever needed an investor. No one ever failed in their career. If they ever failed, they again stood back, they again built another business, and at some point they have had a successful business. So when we understand this fact that success does not come with investment, it comes with right mindset, then we come out of wrong structures, wrong fundings, and discipline your failures. Next. So that's primary idea. Next, what is an idea and how to convert it into business? An idea is something which comes to my mind. I think it is scalable, it is amazing. Question is whether it can be a business, whether it can really generate revenue, whether it has a problem that can be solved, and whether there will be someone who will pay for this solution. I'll give an example of a very nice interesting startup which was led by a chartered accountant, more than a decade of experience, running a successful CA firm, working as a risk advisory associate to large MNCs and corporates, came with an idea of solving biggest problem of Mumbai, space and desire. Today houses are shrinking, there is lack of space, cost of living is increasing, and people have desire to give fresh toys, new toys to their kids. So he came with an amazing idea of renting the toys instead of buying the toys. It will be owned by the library owners, who will be the individuals, public, who can keep small rack in their houses, where these toys will be rented from, and the library owner, who is a housewife typically, will also get some revenue out of it. So it was an amazing startup idea. It went to Shark Tank also. It had a long discussion of 8 hours in Shark Tank. It was scaling gradually. It was growing amazingly. It was with right mindset, right CFO at the back end. However, after 2 years, the startup failed. The failure was for serious reasons. One, was the idea really scalable? The idea was amazing, the thought was amazing. What was lacked in the founder was when you start generating an idea, you start loving it. You have to not love your idea, you have to love your business. And love for business comes from money, not from idea. So he failed on first level. The founder of the startup was, he did not understand the space is shrinking only in cities like Mumbai. The rest of the country does not have this problem of shrinking spaces. Love for kids is automatically driven by gifting from family members. So this desire of new toys anyways gets met up. Space is not a problem, need of new toys is not a problem. Cost of toys are increasing. Earlier they were 20-30 rupees, now they are 400-500 rupees. It is still affordable. So the idea failed because of the lack of understanding there. Affordability was not the question, so people were not ready to pay for this idea. So this is what as startup founders we need to understand. We need to solve a real problem where there is a consumer who is ready to pay for the solution. And not that we are solving a problem, but we are not identifying the consumer base. Next, when should you register your company? Very interesting. Some people say, yes sir.
मैंने समझ लिया, तो मैंने इनको डिटेल दिया है और मेरे लिए एकदम 100% मैचिंग है और स्टार्टअप भी है और वर्ल्ड लेवल का कॉन्सेप्ट है, मेरे को स्टार्ट करना है.
Sir, we'll come to this point also. I'll just give you a brief on when to register a company. This is probably few slides ahead. You will also understand. आपको ये भी मिलेगा कि हमको ये स्टार्टअप कब एग्जीक्यूट किस लेवल पे लीगली हो सकता है.
मैं ऑफिस से मिलूंगा और मेरे को स्टार्ट करना है.
How to go ahead with it? So first step is when you start an idea, when you see the idea has achieved some maturity, that is the point you register now. Not at very initial stage, not at very late stage. What is the maturity of the idea? When the idea is just an idea, it is not mature. When you test the idea, see the robustness of the idea, pitch the idea before the bankers for funding. It's not that you are asking for funds, it's that you are seeking interest of the bankers whether my idea is worth funding. So that's a test we put to the idea on. We pitch to various investors and incubators to understand what is their review on the idea. Once we see some positive growth on it, then we start spending on the idea. That's building the technical team, building the admin team, building the CFO services, and then we really go with the idea in the market. This is the point where you start registering a company. Why you have to register a company? Because a startup has huge initial investment. These investments essentially result into cost which can be recovered in future against future taxes. We have all heard of the concept of Startup India registration, which gives us tax exemption. But this tax exemption does not come very easily, very smoothly. And secondly, when you should claim this tax exemption? When the idea is generating profits, when these profits are worth making, claiming tax exemptions, and how to reach at that point. For that point to be reached, you have to start incurring the cost under a legal format. Legal format could be formation of an LLP or formation of a private limited company or a public limited company, not a proprietor or a partnership firm, because proprietor and partnership firms do not get eligible for Startup India registration, do not get eligible for tax exemption even if you get a Startup India registration. So form a legal entity so that you can even pitch before investors, share your equity with the investors and get some funding if required in future. When the risk is associated to the idea and you can mitigate the risk with the help of these legal structures. Next. Choosing which option to go for, proprietorship, LLP, private limited, I will explain. Next. What to register first? Register first as in whether your idea requires all kind of registrations, compliances at the initial phase or some mandatory ones. Surely not all in one go, otherwise it will add up to your operational cost, which will somehow decline the value addition in the idea. So what is utmost important? First and foremost thing is registration of company, followed by Startup India registration, followed by bank account opening and GST registration. Why these are important? GST registration will help you claim all the GST costs on the expenses that you incur. Startup India registration on day one, along with 80 ISC approvals on day one, will help you understand that next 10 years your startup can claim tax exemptions whenever you want. Also, Startup India registration and 80 ISC approval is a lengthy process. So if you delay this registration, there was one startup which was successful, is successful till today, had an amazing plan, successfully delivered. They are OEM manufacturers for cosmetics. They did amazing job. They are earning 50 crores plus in a year with a profit of about 8 to 10 crores per annum. However, when they went for 80 ISC approvals, they got delayed in their registrations and they screwed up. So they started the company somewhere in 2017. It is 8th year now. They applied for Startup India registration, they got it. They went for income tax registration, they realized they are already late. They already only have 1 year in hand to claim the exemptions. And the cost of this process and the timeline behind the process was not justified. So ultimately they ended up not getting 80 ISC registration, ended up paying huge taxes just because of delayed registration. So registration for Startup India and 80 ISC is at most important, and it is very important to get it at the initial phase of the company. Next. Why it matters? It gives you tax exemption at very first place. Imagine your startup is doing successfully, earning 5 crores, 10 crores per annum, 30% tax slab will save you about 2.5 crores per annum. That's the amount of savings that we talk about. This 2.5 crores is saved systematically for 3 to 5 years. Can even help your startup get listed. Because for listing on SME stock exchange, you require net surplus of 5 crores on your balance sheet, which is exactly where you will get only from this tax savings. So you don't need to really infuse more funds in that. Indian tax relief, government grants, investors trust. If you are registered, if you are compliant, obviously investors will trust your startup, will understand that you are following legal process, and they will fund you much easier and better. Let's talk about internal income tax exemption already stated. Next. Grants versus loans. So I mentioned government grants. We have all heard about funding from investors, incubation funding. We have heard about loans. Are we aware of grants? So government grants is something amazing which comes for startups. When you have a logical startup which has what is the meaning of grants? I'll explain. Let me explain when it comes and you will understand what a grant is. Basically, when your startup is logical, it has an innovation in it, it generates employment. Government gives us support in form of loan which you don't have to repay. Certain loans come with non-repayment of interest. Grant comes with non-repayment of principal. So it's a clean government support. For women it is about 1 crore support. For men it ranges from 10 lakhs to 50 lakhs. So if it is a woman-led startup which is innovative, solving problem of the nation and generating employment, the first grant comes somewhere between 10 lakhs to 1 crore, which is a kind of donation given by government to the startup to run its show, to incur initial operating costs, set up the entire factory or the entire process in the company. It could be a service company, it could be a manufacturing company. So if you are eligible for the grant, go for it. That's the first point where a startup should go. Then you should go to the registration, not directly run the registration. Right? Go back to it. So grant, I have explained what a grant is. Sometimes loans are better than grants. When you see your startup is profitable, it can generate revenue in short run. Grant is going to take longer time. Your startup is not getting directly eligible for grants. Go for government loans. Go for bank loans. Bank loans are quick, easy, fast, cheap. I'll give you an example of cheapest bank loan. FD bank loan. We all know that if you have some money, you put in FD, you get 90% of the amount as loan. There are schemes by banks which gives you 300% of the amount against it. So if you put 1 crore of FD, you get 3 crores of loan, which is at a cost of 0.25% per annum, which is 0.01% per month, 0.02%. That cheap is FD bank loan. So sometimes these loans are better than grants and sometimes better than investor